All right, so have you ever read something, an analysis, a report, and it felt like it was almost there, almost brilliant, but something just felt off? Well, today we're going to look under the hood of an investment thesis for a crypto company called BMNR. The core idea is genuinely powerful, but we're about to see how the way you tell the story can make or break the entire argument.
So imagine you open up this report, and this is one of the first things you see. I mean, what a hook. You're buying $1.10's worth of assets for $1. That's a classic deep value play right there. It's the kind of statement that makes any investor, big or small, stop what they're doing and lean in, because it's basically screaming that the market is missing something huge.
Sounds like a total no-brainer, right? But here's the thing. The catch? It's not in the math. The numbers are solid. The catch is in the message. We're going to deconstruct how this brilliant idea gets kind of lost in a flawed presentation and how just a few simple tweaks could have made this thing absolutely unstoppable.
Okay, first section, the hype versus the data. Now, the original report, it's packed with energy, with real conviction. You can feel it. But as we're about to see, that can be a real double-edged sword. You know, the words you choose can either build a bridge of trust with your audience, or they can burn it to the ground.
And this is where we see that super fine line between conviction and just pure hype. Calling something a money printer or the trade of the decade, it shows you're passionate, for sure. But let's be real, to a serious investor, that sounds less like a rigorous analysis and more like a sales pitch. It's the kind of language that makes them just want to close the tab before they even get to your best points.
Let's look at a concrete example. On the left, you've got the staking mechanism is a money printer. On the right, the transition to a yield-generating revenue model. I mean, they're describing the exact same thing, but one is all emotion and kind of vague. The other is precise, it's professional, it speaks the language of finance. It shows you've actually done the work.
And it's the same idea here. Calling a price drop a gift, that's just, your opinion. But framing it as a significant pricing anomaly. Now that's an objective observation. It's an invitation. It says, hey, I found something interesting, come take a look with me. Instead of just saying, hey, trust me.
And really, this is the key takeaway for this whole section. When your data is this strong, a PE ratio of 2.11 for a company sitting on a mountain of Ethereum, the numbers are already sensational. You don't need to add fireworks. The smartest thing you can do is just step back and let that data be the star of the show.
All right, next up, we have to talk about blind spots. Because a truly great analysis, it doesn't just sell you on the dream of what could go right. No, it looks you dead in the eye and confronts what could go wrong. The original report was so focused on the upside, it left these huge, glaring, unanswered questions just hanging in the air. Now, this might sound a little backward, but talking about risks doesn't weaken your argument. It makes it bulletproof. It proves to your audience that you're not naive. You've thought through the downsides, you've stress-tested your own ideas, and guess what? The thesis still holds up. That, right there, is how you build unshakable trust.
So in this case, there were three big elephants in the room that needed to be addressed. First, what happens to this whole thesis if the price of Ethereum tanks? Second, can the company actually pull off this new staking plan they're talking about? And third, and maybe the most important, if this is such an amazing deal, why doesn't the market see it?
And you can't just talk about risk, you have to put in a number on it. Make it real. A 30% drop in ETH's price would make nearly $4 billion of the company's assets just vanish. That's the fear. That is the exact fear that's being priced into the stock. By putting that number out there, you're not scaring people. You're grabbing that monster out of the closet and dragging it into the light.
Because when you do that, you're essentially drawing a line in the sand. You're showing the reader exactly how much of a cushion they have before the whole idea starts to fall apart. You're directly answering that little nagging question in the back of every single investor's mind, which is, okay, how bad do things have to get before I'm wrong?
Okay, now for our third and honestly most critical point, structuring for maximum impact. The single most powerful, mind-blowing fact in this entire analysis was buried deep inside the report. And that's like telling an amazing joke, but saving the punchline for page 5. It just kills the momentum. So let's just rebuild this argument from the ground up the right way. Fact number 1, nice and simple, the company is sitting on a pile of assets, mostly Ethereum, worth $13.2 billion. It's a clean, simple, undeniable number. Okay, fact number 2, the entire company, and I mean everything, the assets, the tech, the future plans, the coffee machine, the whole shebang is valued by the market at just $12 billion. You starting to see the disconnect here?
So that leads us to a pretty obvious and pretty wild question. wait a second. If the stuff they own is already worth more than the entire company, then what is the actual business part of the company worth?
And the answer is just astounding. If you do the math, the market is pricing their entire operating business, their technology, their future revenue streams, all of it, at negative $1.2 billion. The market isn't just saying the business is worthless. It's saying you'd have to be paid over $1 billion just to take it for free.
That is your hook. That's your headline. That incredible, mind-bending fact should be the very first thing the reader sees. It's the anchor for the entire argument. You have to lead with the tangible, almost unbelievable value that exists right now, today, before you even start talking about future catalysts.
So, after all that, what have we learned? Well, we can really boil all of this down to a simple three-part toolkit that you can use to make any analysis, any argument, way more persuasive. It's this simple. 1. Let the data do the talking. Lose the hype and use objective language. 2. Address risk head-on. That's not a weakness. That's how you build real credibility. And 3. Anchor on your core value. Find that single most powerful fact you have and build your entire story around it.
In the end, it all comes down to this, doesn't it? A great investment thesis, a great argument of any kind, it needs more than just a good spreadsheet with all the right numbers. It also needs a good story. And the real magic, the place where you actually convince people, is when you can merge the two, when you can turn that raw data into a narrative so clear and so powerful that it becomes impossible for anyone to ignore.